This week, we're talking farm income, monthly trade data, a jobs report, and consumer sentiment. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us, as always, is livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, we're going to break down all of those reports coming up. But first, let's recap what happened this week in the markets. And I laugh a little bit because talking about feeder cattle prices and some of the sale barn action this week has been absolutely wild.
It certainly has been. If we start on the cattle side, live fed cattle were 40 cents higher this week. Those feeder cattle markets, and remember, not a lot of tests as we come through the Thanksgiving holiday period, but $5 to $10 higher. I think you can find some extremes out there as well of even higher prices occurring. Certainly with Mexico shut down, that has gotten a lot of interest in terms of just how much tighter we get before we might actually see an opening of that border again to feeder cattle. On the futures side, the February live cattle futures contract was down $2.55 this week, and the January feeder contract was down $3.05. Choice box beef was down roughly 40 cents this week. On the hog side, cash barrels and gilts were down $1.25 on the week. We saw the February lean hog futures contract close up $1.10, and the pork cutout value was down 60 cents this week. But bellies again, part of what was driving the lower pork cutout value.
I think when we're talking about these cattle prices right now, probably should sneak in a little conversation about risk management, knowing that prices have the potential to move higher, especially if we're taking off 5% of the feedlot supply if we don't get trade going again with Mexico. But just knowing that these prices are pushing record levels again and again each week.
Yeah, so for sure, Megan. And I think the point to be made here about risk management, it's relatively inexpensive to end up with a floor, if you will, on prices. Let's hope you never have to experience that floor. But it's so inexpensive, why not take some of the risk out of the equation? I think is important. And just as we've gone up very quickly, there is the possibility of going down, perhaps even quicker than we've gone up here of late. So I do think it's important to understand that, wow, we're at very nice levels on the prices side, and that could turn relatively quickly. Don't get caught buying at the high point and then selling at a much lower price. That probably won't work for many producers. So I do think it's wise to talk about this, and to Mexico in particular. I don't think any of us know exactly when. We might talk about feeder cattle coming back in. I'll say on the positive side, to my knowledge, only still one case of screwworm being detected in Mexico. I know a lot of work's going on, trying to figure out the appropriate protocol. And it seems like this idea of pre-export out of Mexico strategy that would quarantine those cattle on the Mexican side for a period of time, all that seems to be a work in progress. I won't be surprised for markets to react to the downside when and if we start talking about Mexican feeder cattle import again.
Plenty to keep our eyes on as we go into round up the year and start thinking about 2025 as well. All right. Weekly slaughter numbers. Remember, I guess probably a good reminder, holiday shortened week last week, so slaughter numbers were down, but a nice bounce this week.
Yeah, that's right. So cattle slaughter, according to USDA, for the week ending December 7th, 614,000 head of cattle. That's 78,000 more than the shortened week last week, but 24,000 head less than what we did a year ago. And on the hog side, a big run, 2.602 million head of hogs this week, 319,000 head more than last week, but 66,000 head less than what we did a year ago.
And then as we take a look at those year-over-year numbers.
Yeah, so cattle slaughter down 3.6% year to date, and hog slaughter up 0.8%.
All right, farm income out this week. I'm going to say not a major surprise to see these numbers where they are.
Yeah, that's correct. So USDA gave us updates for their 2024 estimates of farm income. Not a lot of change from where they were back in September. USDA says $140.7 billion in net farm income is expected for 2024. That's down $6 billion from 23 and down $41.2 billion from where we were uh, in 2022. I think it's a little bit of a couple of issues going on. I think crop producers are certainly seeing a bigger downturn in 2024, and livestock producers seeing an increase. So a little bit of calculation of looking at revenue receipts and then expense categories that very definitely were crop cash receipts would suggest roughly a 20 billion decline in crop receipts less those expenses, and a 25 billion increase in the livestock less livestock expenses that we could talk about. So livestock producers faring much better than crop producers generally when you look at what's happening with farm income.
And I would assume the lower crop prices are also helping the balance sheets when we're looking on the livestock side of things as well.
Absolutely, and I think it's worth continuing to say. So purchase feed expenses are down quite a bit. When we look at what's been a better year generally for livestock producers across the board, oftentimes it's easier to talk about output prices that are higher, but feed costs being lower has been a big part of that move towards better black ink here in 2024.
Monthly trade data also out this week. As we take a look at the October 2024 figures, what stands out to you?
Well, I think there's one thing that stands out big time when you look at beef imports into the United States. So we imported 414 million pounds in October of 2024. That's 35.2% above what we did in October of 2023. And when you look at year to date, it's just a tick more than 700 million pounds more beef imports into the U.S. in 2024 than we did over the same period in 2023. That sticks out, and it's a lot of places: Australia, Canada, Mexico, kind of lead the list of those that have been importing more beef into the United States. So I think that's the one that sticks out. When you look at the export side of the picture, beef exports, 241 million pounds. That's basically unchanged from what we did October of 2023. Maybe that's good news for us, given when we see what's been tending to be lower beef exports. We're down 67 million pounds year to date on beef exports. So maybe that's good news for us. On the pork side, pork exports, 583 million pounds of pork exported out of the United States, 1.7% higher. We've seen a 250 million pound increase in pork exports year to date here in the United States.
I want to talk pork first because I want to go back to the beef import number and talk a little bit about that. On the pork export side of things, how much is that global demand driving some of this price support that we're seeing, opposed to maybe, I want to say, inconsistent or uncertain domestic demand? There's definitely a different vibe there.
Yeah, so I certainly think there's a little bit of both going on. Number one, and I say a little bit of both some domestic demand, but better situation than 2023. But export demand's been important here in 2024. I will say I think the industry's reaping some benefits from the work that's been done for the last several years to grow these new markets, whether it's Central American countries, Mexico. Um, you look back and it was China that mattered in 2020 uh, in terms of what we were exporting out of the United States, and that was all ASF related in China. And now it's this big other set of countries that are taking um, similar amounts. We may very well set a record in terms of U.S. pork exports in 2025, and it's not because of China. So I think that's an important piece of that pork export story, Megan.
We talk about this beef import number, and I think it's a good reminder to talk about why we're importing in the mix of what is being exported, what's being consumed domestically, and then what's being imported to meet the needs. So when you look at that, the number is alarming or is shocking. Maybe that's a better term. Um, but it's because we need to meet demand and we can't do it all here with the beef that we produce in the United States, right?
So that's correct. We started this year thinking we're going to be very short on production. We're going to end up being just a tick above 2023 levels, probably with 2024 domestic production. Yet we need growth. And I think the important thing, and some aren't going to agree with me about this, I know, but we have very heavy carcasses today. We have a lot of excess fat that bringing in lean beef to go with that fat certainly is helpful to us. I don't know that any of this changes anytime soon. We're going to continue to be short, maybe even shorter on the beef supply side. And as long as these carcasses stay heavy, which when we talk about where feed prices are today, I think those carcasses stay heavy. I think feed yards know feeding those cattle longer helps keep the yards fuller than otherwise might be the case. So I think as we go into 2025, we're going to continue to talk about a lot of demand pent up for additional lean beef coming into the U.S. We won't grow the same percentage growth that we've probably seen from 23 to 24 in 2025, but maybe still some growth ahead.
And a lot of that is an economics play, right? Like the cost of lean beef coming in is exponentially more reasonable than the lean beef that we have here, right?
Yeah, that's correct. And in some cases, the economics are so good, even if a country is going to face some tariff rate quota, it still may be less expensive to bring that beef in, even paying the higher tariff for anything over quota than trying to have domestic supplies. So we can talk about tariffs in some cases, but we're more than happy to even pay those tariffs to get our hands on more beef, just given how short we are here in the U.S. That could change longer term if we grow the herd. And that's a whole nother discussion that can come up as we get into 2025. But perhaps at some point we grow domestic supplies to the point the price differences are a lot less than what we see today.
All right, let's switch to the demand side of things and the consumer facing reports. Jobs numbers came out for November. A slight improvement from pre-report expectations, but a substantial improvement from the previous month.
Yeah, that's right. So 227,000 jobs added in November after what was a much lower number. Now that did surpass pre-report estimates that came in at 215,000 jobs. So all in all, I think good news in terms of that jobs number rebounding after what was a tough October. The unemployment rate did tick up to 4.2% in November. I think the other one that you and I've been spending more time talking about, so average hourly pay, it did increase, but it was only 13 cents. But when you look at it on a yearly basis, it's still running about 4%. And so to this whole discussion of inflation under control, not under control, a 4% increase in hourly pay may still be a little too warm not to keep some inflation going.
I would assume also thinking about that wage, dollars in pockets, ability to spend higher price proteins or more, in thinking about that as well.
For sure. And I think a part of this story helps us, especially on the beef side where we've been so tight and so high on prices. We've had consumers that have generally been in a good stead. And I think that's helped keep beef demand even stronger than otherwise might be the case. I actually think it's helped on the pork side as well. Again, I look back at 2023 and say domestic demand was not all that good, but following up this year with a little bit more stronger demand, I think has been helpful on the pork side.
Put more bacon on things.
We certainly can keep bacon prices higher these days, it seems like, Megan, that's for sure.
All right. As we round out reports today, December consumer sentiment, December numbers are out, and another pretty decent month for consumer sentiment.
Yeah, for sure. So 5 consecutive months of higher consumer sentiment certainly is helpful to that demand side of the picture. Um, I think it's the highest. So December is the highest reading we've seen in about 7 months. Month over month, the December number was 3.1% above November, 6.2% above where it was a year ago. Those are some pretty strong numbers that we saw out of the report. The one that jumps out to me, current economic conditions, month over month, we jumped 21.6%. That's pretty astounding, the jump that we saw from November to December. And that's 6% above where it was year over year as well. So all in all, good news. Expectations portion of that index actually fell a little bit month over month, down 7%. But even the expectations portion is up 6.2% year over year.
Stronger jobs report, stronger consumer sentiment. That's got to be good going into the holiday season. And when we think about holiday spending, gatherings, food as well, hopefully that keeps that domestic demand up.
Yeah, absolutely. I think there's certainly an opportunity here as we finish the year to talk about continued stronger demand, and that's needed where we sit today. So although we've talked recently about retail prices that aren't growing, retail meat prices that aren't growing as fast as they once were, they're still high. We know that. So keeping it to where consumers can afford those things, I think is important as we look over the next couple of months.
All right, that's it for us this week as we look ahead to next week's supply and demand numbers, as well as retail prices. What are you looking for next week?
Yeah, so I don't think we'll get too many surprises out of USDA's supply and demand estimates next week. They don't finalize on the crop side until January. Retail prices, again, it's just going to be a look to see, do we continue to go higher on beef prices? We have seen higher pork cutout values relative to a year ago. We have retail prices on the pork side that continue to support that. But maybe what happens to Meghan's retail bacon prices, just given how tight cold storage has been of late on the bacon side, could be interesting next week as well.
Man, I'm telling you, you feed two almost 7-year-old boys who are like going through bacon and growth spurts like mad. I need a break in bacon prices.
I'm not sure you're going to get one too quickly, but we'll see what happens.
Scott, always great to see you.
Likewise, Megan.
So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfield.agnews.com. You could also submit questions and comments. And for a rundown of what happens every day in the markets, twice a day, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.